Fox Business Alert, the locks are once again coming off at SpaceX after falling to $130 a share yesterday, far below the IPO price of $135 a share. Look at shares of the Elon Musk-run rocket and satellite firm. They have reversed today, and they are moving higher. Listen, Thursday's sell-off was a result of roughly 319 million shares held by early SpaceX employees and investors who then became eligible to trade, i.e. maybe sell to the open market, because the lockup expiration expired. SpaceX's first stock lockup expiration occurred back on August 6th when roughly 911 million shares were made available. Interestingly, on that day, the stock went up. Everybody thought it would go down, but it went up. At the moment, SpaceX is at $136 and change. But early investors actually didn't have to wait through all of this volatility and lockup expiration. One company has taken shares off their hands through their secondary market that's called the Halftime Fund. Joining me now in a Fox Business exclusive to talk about how the Halftime Fund works is Practical Venture Capital General Partner Aman Verjee. Aman is also an alum of the so-called PayPal Mafia. Aman, you wrote the first draft of PayPal's S-1 filing before it went public. You worked directly under David Sachs at PayPal, went to Stanford with co-founder Peter Thiel. You're the former Sonos CFO. So let's get to this. You first got your firm into SpaceX, 2021, correct? How many shares did you buy? What was the valuation at the time?
Yeah, thank you, Liz. Happy to be here. So I've been, as you said, close to that Elon Musk and PayPal network for a long time. We launched the fund in 2021. At that time, the company was already about 20 years old. I won't disclose the exact numbers in the fund, but the valuation of the company at the time was about 73 billion. That's when we got in. And I'll just say it was a meaningful part of our fund. It was one of our top 5 or so positions at the time, and now it's the biggest position in our fund. It's up about probably 20x from where we got in, just based on the valuation with some dilution along the way.
Well, the valuation right this second, as I'm looking at it, is now 1.1 trillion. So that was definitely a good bet. But how does the fund work? You take shares that are in the secondary market, meaning those are people who needed the money, who worked for SpaceX, or they happen to have shares, they wanted to sell them to get some cash, and you pick them up and buy them. And then what do you do with them?
Yeah, so SpaceX, the valuation today should be around 1.7 trillion, fully diluted. It's
I was looking at market cap, sorry.
Yeah, it should be right at the issue price. But what we do, you hinted at the problem earlier when you said SpaceX is a 24-year-old company. They're not the only company to be private longer. When I was at PayPal, we went public in 4 years. It was founded in 1998 by Peter Thiel and Elon Musk, and a merger of those two companies. We were public by 2002. So all the employees at that point could take shares off the table. SpaceX, you said, is now 24 years old. My goodness, that's dating me and making me feel old. But they are, can you imagine being 23 years without liquidity? I've been through, a marriage, a divorce, and had 2 kids. And my older one's about to apply to college next year. So you can't be illiquid for that long. It's not just SpaceX. Palantir's private for 17 years before they went public. Airbnb was 12. Uber was, I think, 10. Snowflake is 8. So just these investors are locked up and employees are locked up for years before liquidity. So what we will do is we'll come in and we'll buy their shares from them directly. So it's a secondary transaction, not a primary, meaning we're buying from existing investors, not directly into the cap table in the company. But we'll take those employees off the cap table, at least in part, and we will then take those shares and we'll own them, and we'll be on the cap table and then close to the company. And so for us, it's a chance to provide liquidity to those early investors and shareholders, and we get the benefit of owning a company like SpaceX and riding through all the years that it takes to get public.
There is a baseline amount just to get access to the fund. It's $1 million. Is that correct?
Yeah, and we have $1 million minimum for investments, and it's typically a lot of family offices, and it's all accredited investors. Sometimes we'll waive that and we'll group smaller investors into groups or into syndicates, and they'll to meet our minimum threshold. That's typically how we operate.
Let's talk about what's in the fund now. You still have some SpaceX shares. You've got Anduril shares. Palmer Luckey, the founder of Anduril, which is a defense company startup, has come on this show many times. He's a fascinating guy. You've got Stripe, Vercel, QuickNode, Mercury, as you see, SpaceX, Canva. And so you've got those. How do people who buy into your fund When do they get their money back, and at what kind of X factor?
It really depends on the liquidity that the companies themselves have. When we get into a company like SpaceX, for instance, we have a plan. We have an underwritten proposal that we think will create liquidity for our investors. We're aiming for 1x back to their investors within the first 3 or 4 years. We hope to get to 2 to 3x back after 7 years, but that really depends on the circumstances. In the case of the fund's only a year and a half old, SpaceX will have liquidity. As you said, they are now coming out of lockup in bits and pieces. So we will have some liquidity back to investors, even though the fund is a little bit less than a year and a half old. So that's a positive. We think that between year 3 and 7, that's typically when the companies we underwrite will get to liquidity either through an IPO or an M&A transaction. And that's usually when we tell our investors that's what to expect. But there are no guarantees. What we do know is that we're a lot faster than your typical VC fund.
Yeah, no guarantees. That goes for the whole stock market, folks. I want everybody to know that. There's a little bit of a casino there. I want to ask this question. I don't see Anthropic or OpenAI in the fund. Am I missing something? And if not, why don't you have those names? Were you tempted to put them in?
We were tempted. When our strategy really revolved around what we call secret stallions. So this is companies where we think there is a hidden value that the market isn't fully capturing. I think Anthropic and OpenAI are fantastic companies. I wish we could have gotten in on them earlier. We'd made our bets on companies like SpaceX and Anduril, so companies that you would have heard of and that are in the top 10 of most sought after companies. But a lot of these companies, like Anthropic and OpenAI, they're being pursued by everybody. So they're hard to get those shares. When you do get those shares, you're often paying a premium to the last round. And we don't think there's a lot of value in general for our investors by just chasing the top 10 companies and overpaying. We think the real value is the next 20 or 30 companies that are doing well, growing quickly, companies like Canva, where there isn't so much market demand and where we think we can get a discount to the last price round as opposed to paying at the top of the market. I think that strategy will pay off for us. It means you're going to pass up on OpenAI and Anthropic and maybe some of those overbid companies, but hopefully it'll work out for investors in the end.
I obviously see that you have Stripe in the fund. A big news involving Stripe and PayPal, your former alma mater there. The Wall Street Journal had a report last week that PayPal is possibly in play, that Stripe would like to purchase it. And this would be along with software platform, financial services, private equity firm Advent International. They proposed about $60.50 a share. The stock has barely moved above it. Last month, PayPal said the price was insufficient. And so I'm just interested to know, because the CEO on his earnings call came out and said, we remain open and objective in evaluating the opportunities if we see levers or paths that we believe would create superior value for our shareholders, that executing our current strategy, we would, of course, carefully consider them. Is that a yes, or is that a brush off?
I think that's a maybe. I think that's, I appreciate your offer, but I'll think about it. Look, Enrico Flores is only about 3 months or 4 months into the job. I think he joined in March. So he's got some work to do to evaluate options. I think it's only smart for him to consider this option and to maybe negotiate and position for a better deal. But he's also, thinking about the BATNA. What does he do? Are there other suitors out there? I'm sure he's thinking about that. Can he execute a game plan against his strategy to really turn the company around? I think it makes a lot of sense for Stripe to buy PayPal. That might be the best suitor. Actually, I am a PayPal shareholder. I should disclose that because even though I worked there 25 years ago, I've kept some shares, mostly for me and my retirement account for my kids. Mm-hmm. There's a wallet strategy for Stripe that is very unique to them. They have a lot of merchants, but when a consumer buys something through Stripe and they use Visa, MasterCard, Stripe is trapped by the legacy banking system. They're routing those payments through Visa, MasterCard rails, paying interchange fees, and their profit margin is really, really thin on that. If they can acquire PayPal's wallet of 440 million active users, then they can do a closed loop network. They can route payments from the wallet to the merchant instantly, bypass Visa, MasterCard, and cut out all those credit card toll booths. And if they can do that and add to that the crypto asset, they have a lot of crypto backend infrastructure that Stripe's been building. PayPal actually has a stablecoin currency.
Sure does. Yep, people are using it.
So I think there's a lot of value there.
Well, that'll be interesting to see. We'll continue to watch it. And so stick by your phone because we're going to call you back if anything develops on that front. Thank you, Aman. Good to see you. And congratulations on your kid going to college.
Yeah, thank you. Appreciate that. She does too.
Okay, congratulations.